Joining us now, Jeremy Siegel, professor at the Wharton School. Professor, so good to have you. You know, you called it right, as always, on Friday when you said, look, these inflation numbers that we're going to get today probably going to come in as expected or maybe even better. What did you see from that reading that you found interesting, and then what do you expect from the Fed this week?
Well, I agree with Roger. We're not going to see anything this week. Honestly, I don't think we're going to see anything until we get Kevin Warsh taking over in the June meeting, unless there's a big deterioration in the job market, which we don't have any evidence at the present time. I also wanted to comment that some people are saying, oh, is this a supply shock such as we had during COVID, and the Fed didn't get ahead of that, it was behind that. This is 100% different, and let me tell you why. Right after COVID, we had the biggest fiscal stimulus bill since World War II. Yeah. And in the 2 years from March 2020 to March 2022, Jay Powell engineered the biggest increase in the money supply that we had in 150 years. We don't have any of that now. And so I do not think that, obviously if we spike very high, there's going to be a ripple. But I think the Fed has got to look through this. The market today seems to be telling me, hey, maybe there's some good news on the horizon. You look at the market; they seem to sense something. One of your previous guests said that almost half the oil through the Strait of Hormuz is now going through pipelines, which I think is really quite amazing. But I think we should have 2 cuts later on in the year. But my God, there's so much between then and now that I think the Fed is completely in a wait-and-see environment.
Yeah, and you mentioned the optimism of these markets up this morning despite all the headlines. This divergence between the geopolitical volatility and these buoyant markets perhaps hasn't been this stark in a long time. We're talking this morning. Does that reflect composure or does that reflect complacency? What's your view of whether the markets are really pricing the risks right now?
I think they are pricing the risk. I mean, certain countries like Dubai is in a bear market now, and I think they just went down 20%. But, we're basically energy self-sufficient. We're going to get the rise in oil prices, but look at the dollar has gone up almost 5%. We don't talk about the fact that is lowering the price of imports which is going to cushion that inflation number somewhat. On the other side, we are so much in a better position than the rest of the world or where we were 10 years ago, 20 years ago. And I'm old enough to remember 40 years ago in 1980 when that oil went up, and boy, we were in one of the worst recessions we ever had because, we were importing half of our oil. So we are just in a so much better situation. And I think the market thinks we do have the upper hand here in Iran. And they're going to come to a deal, and it might be this week. That would be positive. Of course, a lot of tail uncertainty here, but certainly something, the market's thinking something right now, I believe.
So you're not as concerned about inflation right now?
No, because I think once you look through this oil situation, the major factors, I mean, one of the biggest factor in inflation is actually shelter. And rentals on the national index have actually been totally flat over 2.5 years. The Case-Shiller or home price index, so we're talking about owner-occupied, has been up 1 to 2%. Because of the way the government puts these in the data, it's really lagged, but that's a tailwind to lower inflation over the next really year and a half. So, yeah, I mean, oil is going to come through. There's going to be 2 or 3 tenths that is going to come through. But because, credit isn't being expanded excessively, and because fiscal stimulus is just not there, we're just not going to get this as a big inflationary impulse.
And Professor, I mean, you mentioned we're in a better spot, certainly, than decades past. We have previous oil spikes. Of course, we were at $100 oil in nominal terms in 2008 when the economy was much smaller and Obviously, consumers had less to spend. On the other hand, relative to what we expected this economy to be doing in the early part of this year, there's been a significant revision. This is going to be more friction in the economy. Everyone's been hyping a big tax refund season for 6 months, and we're spending most of that to basically pay for energy. It was never going to be that huge a swing factor, and now it's muted. So I think it just sort of it caused the market to adjust what kind of an underlying economy we're going to have this year. Where do you think that is landing?
Well, I think that's one reason why, we do have, we're in the pullback territory, I guess 5% for S&P, although open looks like we might nudge above that. That's why there has been somewhat of an adjustment downward. But if you looked at the major, Goldman Sachs, JP Morgan, they're taking 0.2 off, maybe 0.3 off of GDP. We take a look at the oil futures market. We're back down in the 60s. By the end of the fall, again, things could blow up. But at least in terms of what the markets and the flows are right now, this is not going to. It might offset that tailwind, but there's still a lot of good things going on in the economy.
And lastly, Professor, you mentioned that Warsh taking over in June. I mean, There's been a lot of headlines about the subpoenas and Attorney General Pirro saying, look, she's going to appeal those decisions. This could actually end up remaining Powell for longer in that seat. What do you think is going to happen, and how could that affect where we see rates headed for the rest of this year?
Well, let me give you my opinion here. I think it's 100% that Warsh is taking over. I don't understand why Trump, is pursuing anything now unless he fears that Powell is going to stay on. Now, very honestly, I would not stay on if I were, quote, demoted from chair to a regular FOMC. It's almost unprecedented. So he's going to be leaving anyways, I don't understand what the pursuit is anymore on that issue. So, my feeling is it's going to be worked out. Warsh is going to be taken over for the June meeting, and I think that Powell will not continue on at the Fed afterwards, and so this whole issue will die.